And we are live. Welcome to our weekly market update. My name is Vinnie, and this guy over here,
I'm Erik Sandstrom, Prime Lending. How are you?
boom. And thank you for being here today. I'm going to go to the clicker below. If you watched before, you know the clicker below gives information, up-to-date information. As of today of where the market sits, inventory is slowly trickling up, but something I've said for the last couple of months, we need a lot more of it to really make a dent. We've pushed from about 1,800 active properties roughly about a month ago. We're at 2,300 right now. So it has gone up a tad bit. You're talking about roughly about a third of the inventory. From 1,800 to 2,300. Yet, again, we need a lot more. One saving grace is pending properties haven't gone up to the degree that active properties have gone up. So that's kind of helping there. Usually takes a little bit of time before we see the effects of what's happening in the market now to truthfully, I guess, change the market, because you always have those outliers, those people that are still living off of what happened 6 months ago. Yeah. Erik, how are rates looking this week?
They actually kind of interesting. So we had the Fed market update that just happened on Wednesday, and everybody was expecting the Feds to boost the rates the Fed rate by 0.75, and they ended up pulling back on that. They pulled back down to 0.5. So what we saw on Wednesday, we were expecting a hike, but because banks already assess risk in these situations, because we know that they're going to be boosting rates by 0.75, we actually saw rates go down. But the message to this is really we don't want to be looking at what the Fed is doing to determine what the interest rates are going to end up being. The best thing to do is to more look at the 10-year bond, the 10-year yield, and what that's doing. So, for example, it's up at like 3% right now. And if it goes, let's say, above that number, what's going to happen? Interest rates are going to go up. But that's going to fluctuate with whatever the Fed does. So we really don't know how the Fed increases are going to affect mortgage rates specifically.
So, what are your guesses? And every time we have someone new on here, or even yourself, we talked about it. I mean, where do we think the market's going? Where the rates are going to go? Any ideas, thoughts? Where you think rates are going to be touching end of the year?
I do, yeah. I think we're going to see 8% by end of year. Right now, we've seen, so up until recently, we weren't able to sell a lot of loans that were what's called at par with no discount points because Fannie Mae hadn't caught up to everything that's occurred. So some people with bad credit, or let's just say not less than perfect credit, that were qualifying for conventional had to pay in order just to get the highest interest rate available. So now we're seeing some of those people actually up in the mid sixes already. Yeah, we're already seeing a pretty sizable increase, but the market is starting to, it seems like, get adjusted to that as being the new norm. It's usually about 60 days before they, get adjusted to it. And we're about reaching that point.
Well, definitely some bad news, but hopefully this can bring you good news. It is question time. Your chance to win $50. If you watched it before, you know your chance to win is just based off of texting below the phone numbers for your answer. Now, here is the question for last week. All right. How much did the most expensive detached property sell in North Park so far this year? What's your guess, Erik? What are you going for?
I think I'm going for around 2.3.
Oh my gosh. If Erik was playing last week, he would have got it right. 2.3. Nice job, Erik, right there. All right. Let's see how good he is when we talk about, for this week's question, how much did the least expensive detached property to sell in San Ysidro so far this year? San Ysidro, if you're not familiar, it's definitely a little bit farther south than North Park. It's a border town, so food for thought. And before we get here, while Erik and everyone else is thinking it over, here are the numbers for San Ysidro, so you at least have an idea of what the detached market has looked like. So median sales price in 2022, $735 in April. 667 the year before. Year to date, 730. So you're talking about that ballpark of, I mean, low 700s. So hopefully that helps out you and everyone else listening. You want to take your guess, Erik?
And we're not talking about condition, right? So condition doesn't matter at all.
Just detached property on the market on the MLS.
420.
420. All right, so that's Erik's guess. Maybe he's right. I mean, he was right on the North Park one. He might be right on this one. So take his answer and run with it. Send the text out or go with your own. All right, Erik. While people are texting and I hear my phone vibrating, what are some other options, other available ways to purchase, especially when you're factoring in these high rates? Are there grant programs that you're hearing about? Are there any other programs that might make it a little bit easier to buy right now?
Yeah, actually, California just came out with something, but I'm going to be doing a video on this specifically here soon. But California just came out with a program where they're giving 10% assistance in a form of a second lien that's forgivable after 5 years as long as you occupy the property. Now, the question is how many people are going to qualify for this? There's a very strict income limit of 80% of the area median income. So that happens to be 76,000 in San Diego County. So you have to think to yourself, who's going to qualify for a house that makes $76,000, but they can potentially get this incentive. So if you've got somebody that has, let's say, decent credit with literally no debt and maybe purchasing in Bakersfield, Kern County, somewhere Hemet maybe, that may be a good program for them. So that's brand new. That's as of this week as well. And then we're also offering a program that does not have an income limit that's going to basically bridge that gap from what we call CalHAFA, down payment assistance, which is what the state program is, that, again, won't have that income limit. Right now, the program has been discontinued, but we expect to be launching it here again soon.
So, I mean, that's always a tough line that you have to kind of live on right there, where you don't make enough to qualify for the grant, but make enough to qualify for the loan, right? I mean, that's the same thing we see with the San Diego Housing Commission and other programs. So there is that thin line right there to figure that out. And again, it's going with someone creative. I mean, like Erik, to really see what's doable in your situation. Just because maybe one lender didn't have that program doesn't mean all lenders don't have that program that you're looking for. So reach out to your trusted source. If you don't have a trusted source or need a backup source, reach out to Erik. His information is below. And
same thing with you, Vinnie. You're a great agent. So, I mean, I got to plug you too.
Well, I appreciate it. Thanks, guys, for watching. Please subscribe. Please share. And we are going to have a buyer seminar in the very near future. So please keep your eyes open for that. Hopefully dropping some knowledge to give you some insight into the marketing, going a little more in depth with what's possible for more scenarios.
Yeah, we'll be talking about that grant as well.